Okay, everybody, I am super excited to have today's show. Thank you for coming to the Master Passive Income Show. My name is Dustin Heiner, and I'm here to help you learn how to quit your JOB, that just over broke job, by investing in real estate rental property so you never have to work a job again. Now, I have a great guest here with me, a friend of mine. His name is Deacon Hayes. He's had rental properties as well as Airbnb, and he's also paid off thousands of dollars in debt. So, Deacon, thank you so much for being here on the show.
Thanks for having me, man.
Yeah, so tell us a little bit about you. You live here, like we're literally in Phoenix right now. We're in Scottsdale area, this type of area. And so we met because we go to conferences and that are very similar, as well as we hang out at your office here. We're literally in your office. So tell me a little bit about your history and what you're doing now with your life.
Sure. So back in 2008, got married to my wife, Kim, and we realized we needed to kind of figure out this money thing. And we put together our finances and realized we had $52,000 in debt outside of mortgages. I actually had two properties at the time. One of them was a rental property, but just knew, hey, we gotta hit this head on and we gotta change things. So we paid off all $52,000 in debt in 18 months. And we're like, whoa, this is amazing. However, I still had those two properties and was trying to figure out how to make that work at that time.
So these two properties, I want to get to the debt. I definitely want to get to how you paid that, because that sounds phenomenal, because I know a lot of people listening we have lots of debt. That's just how we accumulate. But thinking about the rental properties that you had before, so what made you buy them and what was your plan? And then how did you transition into Airbnb?
Sure. So really at the time there were really crazy loans available. So there was a no money down 80-20 loan, right? So I could get 20% loan from
I got one of those too.
And 80 from another lender. And it was like 8% and 13%, like it was ridiculous. And then the other one was like 5% down, right? So both of them, I'm paying ridiculous amounts of premiums to just do it. And neither one of them really cash flowed from the get-go, right? It was kind of one of those things where I was trying to figure out the numbers and I should have crunched them up front, but I learned a ton from that.
So you bought them to have them as rental properties?
So originally I was going to buy one to flip. And so I bought it at like $164,000 and it was worth like $210,000, but it needed some work, right? But this was right at the top of the market. So I do the work, I list it, and I get no bites. And like all I see is like the market's going down, the market's going down. I'm like, I should be able to make 50 grand on this property, right? And so it didn't work out the way that I thought it was going to.
So you bought it to flip. Did you buy the second one around the same time, or was it different?
Yeah, at the exact, like within a couple months of each other.
Oh my goodness. Yeah. So you got leveraged on both of those.
I got leveraged on both of those.
80-20.
Yeah.
And so how long did you hold those? Did you hold them as long-term rental properties? What did you do? How did you switch it out to where you can actually not be losing your shirt?
Yeah, so I held on to them for as long as I could. Like one, I think I had 5 to 7 years, the other one about 10 years. And neither one did I make a profit on. But I learned a ton, and I learned a ton about real estate. I learned a ton about passive income, and it really helped me kind of make better decisions moving forward.
Yeah. Now, thinking about passive income, that's one thing that I absolutely love. And every single business that I create now has a component or is predominantly passive income, where I work one time and people do work, or my properties do work, and I just keep making money over and over again. So talk to us about your idea of passive income and how that implements into your businesses that you have now.
Yeah, so I mean, back in that time, I actually had an e-commerce store, right? And I thought, man, it'd be great to be able to just like sell products to people online. But the problem was I'd have to go to a distributor, I'd have to pick up the product, I'd have to store it in my house, I'd have to go to the post office. Like, man, this is not passive, right? And so, I thought, okay, maybe, websites is where it's at. So now I have a site called Well Kept Wallet where we help people make money, save money, pay off debt. Those are 3 things. And so we make over 6 figures a year in passive income
from Well Kept Wallet?
From Well Kept Wallet, from that site alone, and realized like, oh my gosh, like low overhead, write this content, pays for years to come, but really gave me the resources and things to do, in other real estate projects as well.
So let's go back to the model of your Airbnb. Like you had those 2 properties and then you wanted to not lose money on those properties. So did you quickly jump into doing long-term or short-term rentals from those properties? And then how did that transition to where you actually sold the properties?
Yeah, so originally I wanted to do short-term rentals, or I shouldn't say short-term, but like 6 month to a year leases, right? Because a lot of the college students, younger guys, is who I was renting to because that was my peer group at the time, right? And so trying to figure out ways that I could get people in there and have multiple people renting for me, so that, like, let's just say I had 3 people paying $500 a month. That's $1,500 a month versus 2 people having 2 rooms and paying me, $1,000 a month. But then I'd have a lot of turnover, and it was just a lot to keep track of. And so it really kind of made me think, like, yeah, the long-term way would be better. But this is like pre-Airbnb, right? When Airbnb came out, it kind of changed things.
That was probably what, 2014? 2013, somewhere around there?
Somewhere around there.
Yeah. So my first rental property I bought was in 2006, 2007, right around there too. And I bought it for cash flow. I wasn't thinking of flipping. I was just like, I just want to make sure I'm making money every single month. And those properties that I bought back then, before the crash, I still own and I still make cash flow. And so when it went up, I made money. When it went down, I made money. It was going sideways and then back up. So I've made money every single time. Tell me about the struggles that you had when you bought a property and then you weren't making passive income. I mean, was that rough financially on you and your wife?
Yeah, so it was rough. So really, I didn't know how to kind of make it float every month. And so for me, it was like we ended up, we moved into one because we're like, okay, when we got married, my wife and I both had an income, so we're just going to float the one. And then the other one was like break even at best, right? When you add in the HOA, you add in the water, the sewage, all that stuff, and you're like, holy cow, like, I'm paying $1,800 a month and I'm getting $1,500 a month. You're like, this is not a good formula, right? And so, it's funny, my grandpa told me beforehand, he's like, Deacon, you need to make sure that it all pencils out, make sure you read the CCNRs, all this kind of stuff. And, interesting thing that I didn't do that I should have was, if I would have read the CCNRs for one, it had a land lease on the condo property. And I wasn't really too familiar with that because I'm like, okay, they own the land, but I own the condo, so what does it matter? Well, they 10x the land lease payment. Oof. And I'm like, can you even do that, right? Like, is that legal? And yeah, apparently you can. So I learned that, like, yeah, you don't want to buy a property on land lease, or if you do, you better have every I dotted and T crossed, right?
That's something that I never do. Especially all my students that I teach them, anytime they bring to me a condo, a townhouse, or anything, HOAs aren't bad, but with condos or townhouses, you're going to have an HOA just because you're not actually buying the entire land. And I personally never touch condos. I want to have as much control over that as whatever I own as possible. So talk to us about now utilizing Airbnb. What could have went wrong? What went right? How do we utilize Airbnb to make sure we're at least making as much money as we can?
Right. Yeah, so when I transitioned to Airbnb, I bought a second home and I was like, hey, I don't want to pay this whole bill, right? Like, it's a second home. I want it to make money. And so the cool thing is I learned about a site called AirDNA, and I wish I would have learned about it beforehand, but basically where you can see what the rents are like and the vacancy rates in a certain area. Now, ours was in Payson, Arizona, which is like a tertiary market. So it's not a destination location. It's like a high vacancy rate, and I didn't know that, but we had family up there. But what I found is that there are ways to maximize. So like, for Airbnb, I never use the recommended Airbnb price. I go in and price it to what I think is competitive with that specific market. And then that way I got more occupancy, and therefore I would increase my earnings, right? I also found to get more than one cleaner because I've had cleaners quit on me, right? And I'm like, I'm not driving up to Payson to go clean it to turn it over for the next person, so I got 2 cleaners, right? So just these like little minor things that I found here and there that helped make it more profitable, make it more less of a headache and more passive.
In thinking of having Airbnb as being passive, it to me, being an outside long-term property owner that have long-term tenants, it seems like Airbnb having cleaners, having to handle the phone calls of people not being able to get in, calling the cleaners, now go clean it. Did you hire somebody else to do that management, or did you handle it yourself?
So I didn't, but I highly, highly, highly recommend that you do that, because I tried to find people, and it's hard in a small, it's less than 15,000 people, right? So you kind of have to know people that live there to be like, hey, can you see if your Aunt Joe wants to do this? I don't know why I said Aunt Joe, but yeah, you have Aunt Joes. But I mean, the idea is like, yeah, if you get, like, if I was to do it again, I would look at some place like in Arizona, Sedona, Flagstaff, like places that people are actually going to, whether it's the summer or the fall, and then looking at, well, they already have Airbnbs there like hundreds, right? So they have property management companies that will charge a fee, and that would definitely be more passive. I was answering a lot of messages, like, oh, the Wi-Fi is not working, or I can't connect to the thermostat, or whatever it is, right? And so to have someone to manage all that for me would have been awesome.
So you definitely ran into some things that were negatives. What were the positives? Is it because is the best thing that you make more money? Is that the main positive, or are there any other positives?
Well, I think the positives for me were peace of mind, right? Like, especially with a second property, that you have someone there consistently, right? Because we weren't there all the time. So like if there's scorpions or rattlesnakes, because we're in Arizona, obviously you probably don't have those if you're back east. But yeah, I mean, you just know that the property's being kept up. There's not a water leak, that kind of stuff. Also that the revenue's coming in that pay more than paid the mortgage payment, right? And some months was really profitable because you have it just completely booked. So there was a lot of pros to it. I'd say that some of the cons were, like, especially if you want to stay there yourself, like, well, people want to rent it when you want to go there, right? And that's the thing. You're like, well, I want to go there for Christmas, but people want to go there for Christmas as well, and they'll pay top dollar. So you have to sacrifice, right? And be like, okay, well, we'll go the week after.
Before I got in and started investing in real estate, I think every single person, before they get into it, they start thinking of, I'm not saying that it's right or wrong, but we go into the idea of, man, okay, if I invest in real estate, I can make money, which would be great from the rental properties, but I can also buy in a place that I really want to go to. Like I could buy a house in Hawaii, and whenever I go there, I can stay there. But you hit the nail on the head that when you're going to go, more than likely people are wanting to go, and you're also going to have the trade-off, like the opportunity cost. If I go there and use that time that's booked up where somebody's going to pay a premium to be there, you're losing out on that. Is that something that we should take into account? Like, should we buy a place where we would want to stay, or should we just consider it as a business and say, we're going to buy this place, run it as a business, and then go rent someplace else? Like, what are your thoughts about all of that?
Yeah, I think that's a really good way to look at it is, hey, buy it, run it as a business, and if there's low times that people aren't going, then go with your family then, right? Like, but don't expect that you're like, I'm gonna go for Christmas and Thanksgiving and I'm gonna go for the whole summer, like, because yeah, you're gonna lose a ton of money, the opportunity cost isn't gonna be worth it.
Yeah, especially if you're looking at it as a business and you're counting on the income. If you're staying there, now it's totally different if it's like, I want a place that my primary reason to have it is to go stay there, and then I could rent it out whenever I want. Like, it's not necessary that I have to rent it out every single day or every single time that is a premium. So I absolutely love traveling the world. So my wife and I, and our kids, we travel the world. And I thought to myself, because when I first started investing, I thought, I'm gonna buy a house in Hawaii and one like in the mountains, like in Colorado where I can go skiing. But then after traveling the world, there's so many other places. Like if I owned one place in Colorado or Hawaii, I'd feel like I'd have to go there every single time, and it takes up time. But one thought is, on top of what you said, if you're going to go outside the normal times that people would go, like we homeschool, and so literally during the week when nobody would be there, let's go use our place. So that's another thought. Now, when you're thinking of any other problems with Airbnb, any other issues that came up that you would see that if anybody wants to jump into short-term rental properties, what should we think about?
Yeah, I would say, one of the main things is people don't always return it the way that they found it, right? And so just kind of building that into your deposit fee. So how much you deposit will kind of steer people away from riffraff coming. So if you charge a higher deposit, making sure that you have all the right stuff. So like a curling iron, like I don't even know what, I know what it is, but I'm a guy, like I have short hair. I'm like, but there's actually a box that people will check, like, is there a curling iron on it as this Airbnb, right?
Wow.
And you won't even show up in the listings if you don't have that checked, right? So just like little things where you're like, okay, I had a Keurig and I actually put K-cups in there because I'm like, hey, this is a bonus, right? For people to come and be like, hey, they provided 50-cent K-cups for me to drink for my family. Like, that's awesome. Maybe not the best business decision. Maybe you can just do folders, but
the big thing of Costco folders.
Yeah, and a scoop. They can scoop it. They can refill one of those K-cups.
Yeah, exactly. So there are now. I don't want this to be necessary about negatives about short terms, but one thing that does come up, like right now when we're literally recording this is when Corona is running around. Rona's running around all over the world, and Airbnb is not doing well, especially if you're doing rental arbitrage. So everybody watching this on YouTube, I have a video talking about rental arbitrage, which I would say absolutely never do. I, as an investor, I would never do that. So I'll give you all the reasons. So I'll put that link inside the description as well. But so having right now where literally nobody can travel. They cannot travel. People getting refunds. That's another big thing. If you were booked out the next 6 months and something like this happens where there's lockdown for a month where nobody travels, they've already paid you. You might have already spent that money. Then you have to have refunds. So tell me a little bit about the thought of, or the scariness about now you have an entire place that is, you need to have that income to pay your mortgage or utilities or whatever it might be, and now you literally cannot rent it. How does that affect you?
Yeah, so we actually sold our place on like March 16th, which was like 3 days after the shutdown.
Wait, right now, like
the Airbnb, yeah.
This year?
Yeah. Wow. So we lucked out because, we would have been hurting because we were like, hey, we want to get that $3,000 a month of revenue or whatever it would have been for this good time. Because in Arizona, going up north is huge. People for May, June, July. So we sold it. We actually bought it for $405, sold it for $460. So think about like we got the rental income plus we got the appreciation and we did some updates to it. So that was kind of the upside of it, right? But the downside would have been like, if we would have still owned that right now, if anybody was booked, I'd still have to make those mortgage payments, but I'd have no revenue coming in, right? And that would have been horrible.
That would have been very horrible.
Yeah, that peace of mind that I was talking about for me as an investor is key, right? And and I had that early on in 2006 where I didn't have that peace of mind and I learned so much from it. And so hopefully you watching this, you're learning like, hey, let's make these choices different. Let's stay away from kind of that rental arbitrage game. Make sure you put the 20% down, those types of things just to kind of increase that peace of mind.
Yeah, absolutely. I hate to have to pay a mortgage when you don't have any money coming in. So you also paid off loads of money in debt, like $51,000 or almost $52,000 in 18 months. That sounds undoable. That sounds like it's almost impossible. But did you get other jobs? How can you do that? Cut up $52,000 in debt in 18 months? Yeah,
I think the first thing was that mindset shift of, hey, I'm not going to live using debt as a tool to be able to get wealthy, right? It was, hey, I use a debt as a way of life, essentially, right? And so for me, it was not used as a tool per se, but more as like, if I wanted something, I borrowed money to get it. I changed my mindset to, if I have cash, then I can afford it. If I don't have cash, I can't afford it, right? And obviously the real estate, we'll talk about, that's a little bit different, but that was my mentality. And so therefore, I had a car payment and I was like, I need to get rid of this car. I can't afford it because I don't have the cash to pay it off, right? And so I sold an upside down car that I had just bought. It was like $1,000 upside down. And my wife and I sold a ton of stuff on eBay and Craigslist.
Wait, so pause that. So you sold the car and you lost money, but you knew that it would help you out in the long run.
Well, yeah, because otherwise I have that $362 a month car payment that I have to make for 5 more years or whatever that term was, right? So for me, it was, okay, I have this. And when the increased insurance costs, right? Because when it's a newer car, it costs more money. My registration was more because it was a brand new car. So there's all these other things that I never thought about, right? So it's probably $400 a month in liability to me that I had to come up with. So I'm like, hey, if I can get rid of that, buy a beater car. It was like a '96 Lexus. It was still a Lexus, but it was old. And I sold the new car, bought the used car, and I freed up that $400 a month in cash flow that I can now put and snowball that towards our credit card debt, towards student loans.
So did you get another job or try to get more income, or was that like the main catalyst?
Yeah, so at that time there was no DoorDash or Postmates, so I went to my local pizza joint and I was like, hey, are you hiring? And I got a job delivering pizzas at night.
Wow, that's phenomenal.
Yeah.
Not a lot of people would think, I need to work a little extra hard. Or harder. I need to work harder in order to get myself out of this debt, because I know a lot of people that I work with, or people that want real estate coaching, they start out with very, very little income and very little money. And we have to build that up to where they have either more income or more savings or whatever it might be, because if you don't have money, it's really hard to do real estate. I mean, it's possible. For everybody listening, you can absolutely do it with low and no money down, but it is so hard. There's a reason why literally very few people do the low and no money down, is because it's so much work, it's so hard. When you have cash, you actually can buy property so much better and easier. And like you said a few minutes ago, you have a peace of mind. Like you've put enough money down to where you have that buffer. You're not going to be losing your shirt if something like this happens where you have Corona and you can't actually rent out the property. Because when people are locked down for a month, 2 months, if they're in long-term leases, they're literally locked down for long-term leases. But if you have a short-term lease, it's short, like Airbnb model. People are going to be not going there, and you're not going to make money. So now, with you actually cutting out that debt, did your wife do anything else? Did you guys do anything else differently? I know you shifted your mentality, which I want to get to in a second, but did your wife or you guys do anything differently other than, selling things, eBay, getting extra job? Is there anything else you guys did?
Yeah, I think there's just minor things. So like think about when you go out to a restaurant, or when we used to go out to a restaurant, right? Instead of ordering a beer or a soda, like I just get water, right? And you think about that, if you go out 4 times a month and it's 2 of you and you're like, just a soda alone is going to be $2 to $3 per person plus tip. So you're like $6 to $7 just for drinks. And then if you buy beer, get a game over, it's like $50 more or whatever. So it's like just those like minor tweaks where it's like, hey honey, we got a budget, we're trying to live within it, and my wife is on board. So I know we sold some of her stuff on eBay, so she had some like designer clothes and purses where she's like, I don't need these anymore. So yeah, she definitely helped out in that equation too.
That's fantastic. Now, I didn't have that debt. When my wife and I got married, I didn't have any money, but I didn't have any debt. So I was just, paycheck to paycheck, living the just over broke job. My wife, we got married, and she brought a little bit of money, like, I don't know, $12,000 or $13,000 that she saved up. And so we didn't have to dig out out of the hole, but we did the same things you did to get into where we have a mountain of money to buy real estate, buy rental property. So could you utilize that same idea to have more money to invest in properties?
Yeah, so that's exactly what we're doing right now. So we paid off our house, so we're completely debt free. Again, this is the second time we did this, but so now the money we had a $2,000 a month mortgage, we're putting in the bank, right?
Yeah.
And so, but we had to, we went from living paycheck to paycheck to paying off our debt to being completely debt free to now we have this extra money that we can bank so that we can be ready for those investment opportunities when they come. And I mean, it's possible. I'm not an economist, but there's going to be some lagging indicators of businesses going bankrupt, people getting foreclosed on. And so I'm imagining over the next couple of years, there's going to be some deals out there.
Yeah. Absolutely, especially it's already been going up since the last market correction or crash back in 2008, 2009. It's been going up for literally 11 or 12 years, which is not normal. It usually does a correction sometime in there, but we don't see it right now. We haven't seen it yet. And people are saying, it's easy to say right now when Corona, people are literally not working, it's easy to say, okay, it's recession. I personally am a little more, I think maybe it's going to come out a little further, maybe another year from now. That's just my opinion of how the recession or a correction could come. But once it is, people who have cash will absolutely be able to jump on opportunities. What do you think about having and storing up cash for future investment opportunities?
Yeah, I think for me, that's what I prefer. Like I prefer to use little to no debt for those investment opportunities. So that's just my preference. And it does take time, right? Like you said, I mean, it's hard to come up with that amount of cash. But it's setting yourself up for success, right? So first, attacking your consumer debt. Second, stacking up that 3 to 6 month emergency fund. Third, making sure your house is paid off, and then putting as much cash away as you possibly can by getting a side hustle like I did, and figuring out how you can come up with as much cash so that you are more attractive than the other people out there trying to borrow money.
And have you thought about, so you have many businesses right now, or at least a few different businesses. You've also, like the place where we're literally sitting right now, it's a co-working space. Now, did you start it, or are you part owner, or how did that work out?
So, no, another lady named Karen started it, then I bought the business from her, and then I sold the business like a year ago. So I got negotiated free rent for life in my deal. So I was able to make money, and I got a free place to work now. So
that's very cool. So I want to get your opinion. I personally think it's a great idea that you got out of the commercial in a sense where, obviously it's a business, it's just a location. But what are your thoughts about commercial now that with the coronavirus, everybody literally saying you must work from home? Mm-hmm. Now the shift in mentality-wise, I'm thinking the commercial office space market is going to be rather rough because more and more people are going to realize, hey, I don't have to have a big office anymore. Right. Let me have my employees work from home. Or the employees are saying, why do I got to come in the office for 2 months? I literally stayed at home. Why do I have to go in now? Like, what are your thoughts about the commercial market? Since the co-working space is a little different, but what are your thoughts?
Yeah, I think it's gonna totally change, right? I think people are gonna work from home more. However, I think there will be opportunities in real, metropolitan areas. So like a Phoenix, right? Like I think that there's going to be places that the outskirts. So, for us, like North Phoenix probably is going to shrink. Like why would I drive all the way to North Phoenix if I can work from home, right? Versus the downtown, like maybe people still want to live down there. They want to go to basketball games whenever that starts again, and baseball games and all that kind of stuff. So I think that the reality is some of these areas, those office places will do really well, while other ones are probably just going to go away entirely, right? Also retail, like I know, like we're in a mall right now and this place is completely a ghost town. And so I could imagine that some of these people aren't going to come back. They're not going to open back up because they're just going to say, hey, that was 3 months of lease payments that they had to make. Even if they had to defer it, they got to make it at some point.
Still have to make it up, but you didn't make that money to begin with.
Yeah, they didn't make any money except for maybe the PPP if they got in.
If they got in, but then they have to pay that back too.
Yeah, and they can only use it for payroll. They can't use it for rent. So I mean, there's a lot of. So I think it's a questionable market to get into, right? It's very iffy. Where I think like the residential market, people need places to live, people need to rent. It's probably the more stable place, in the near future.
As I was walking in to come up here to do this recording, I walked by, there's a taco shop. It's a food court area, is right next to where this office is, and I saw they're open. And I looked at them, not because I'm hungry, but I want to support them. I'm like, good for you to try to actually be open. So when we get done, I'm going to go buy some tacos. But it's really interesting to see what's going to happen. I think the residential, I love residential. I love single family homes up to four units. Anything above 4, when you get to 5, that's commercial. That's like apartment complexes, different type of financing, all that sort of stuff. I really, really love single family homes. So in your future, do you see yourself getting any more single family homes or anything like that, investing?
It's possible. So I will say one of the things that I personally want is an office building. And so like I said, I think that there is some risk there because less people will be officing, but there still will be people like you're going to go meet an attorney at the attorney's office. You're going to go, title agencies. Like there's going to be places where you're still going there to sign paperwork and do stuff like that. So for me, I need an office to work out of. So it's kind of like the old duplex model, right? It's like you buy a duplex, you live in half, and then you have a tenant in the other one. Yeah. So that's kind of what I'm thinking is buy the office building in a good area that I know that there's plenty of people that want to rent from, and I would work out of it, and then I would have tenants that would basically flip more than whatever the cost is for the place. So.
Absolutely. Yeah. So I was looking at starting a gym, and I found a location, decent location, and the landlord.
Good thing you didn't start one yet.
Seriously, I was literally going to sign if they were going to come down on the price. It was like December. I was going to sign for that would have been horrible right now. Yeah. I would have been arrested because I would have said, no, I am not closing. I'm not closing. I don't care if you guys are paying or not. I'm just keeping my gym open because I got to make money. But long story short, I was looking at leasing a place. They were asking $6,500 a month. So crazy for 4,000 square feet, industrial place, and that was so astronomically expensive. I could literally get a loan, put $60,000 down, get a loan, and have a mortgage payment for owning for like $2,800. Right. $300,000. So it's like half as. So it's so much better to own as opposed to renting or leasing, just because you're paying them money. They're making money. That's why we love owning real estate, is because we make money on top of it. Now, any other thoughts of investing in general? Now we were saving cash. We see hopefully some things coming. Any other thoughts about investing and getting passive income in the future?
Yeah, from a stock market standpoint, I'm a huge index fan guy, right? It's like there's a book by John Bogle, who's like the godfather of index investing, and he talks about how the majority of financial advisors can't outpace index funds, right? And so he has study after study where it just shows just like put it in index fund and let it ride, And so especially in this time where it's kind of like, hey, market's at say 2,800 for the S&P 500. It was at 3,300. So you've got that spread, right? So eventually it's going to go back and then 10x it, however many years from now, 20, 30 years from now. But the idea is like, I have that part of my plan. I mean, if you're watching this, you probably have a retirement plan, an IRA, a 401k, those types of things. And so for us, it's just maxing out those plans, getting, the index funds. I'm not looking for the penny stocks. I tried that, didn't work. We'll do the old tried and true method these days.
I am so good when it comes to stocks. to buy high and sell low. I'm very good at it. Like, I am uncanny. I'm so amazingly good at it that even if I think, okay, no, I would normally sell now, so I'm going to buy more, that's the wrong decision. Like, every single time. If you do something like an index fund, you literally just put your money in there. When it goes up, you put a little more money in. It goes down, you put a little more money. You just keep adding it. It's the dollar cost averaging, and eventually, hopefully, over time, like we see, it goes up. Is that correct?
Right, that's it. And I mean, for most people, I mean, I will say, so in the quarantine, I have dabbled in some single stocks. Some have done well, and some have not. It's been positive, but it's what I found is it takes so much of my mental energy because I'm checking them every day. I don't check an index fund every day, right? But if I buy an airline stock, I'm checking that thing every day, right? I'm like, eventually, like, there's gonna be a bailout. It's gonna go up. I'm like, this is ridiculous. What am I doing? So I do have a metric for that, which is no more than 10% of your assets in single stocks. So if you're gonna go, dabble in some single stocks, don't expose too much risk to it. In fact, don't buy airlines. I'm totally joking about that. It's like, I didn't realize how much mental energy when you own stocks it takes.
Same thing. I bought Live Nation. So it was at 70. It's an event company. It was at 70, almost $80. Dropped all the way down to like 28, maybe 22. I bought it down then, but I'm still looking at it all the time, even though it was back up to like 40 something. Yeah. And I'm like, eventually it might go up to 70 again, and I'll just cash out. But it was literally 1% of how much money I have cash. And my wife, she got mad at me. I said, you know what, babe, I put some money toward, why did you do it? We don't buy stocks. I'm like, I know, I wanted to do it. We have a little bit of extra money, let me just throw some money at it. But I always look every day, what does the stock do? I got the stock ticker to see what it's doing. And it's just my rental properties, I don't even think about it. I know how much money it's mostly coming in if there's an expense that comes up, but I love not thinking about my rental properties. So let me ask you because you're a finance guy, you know about finances, you know about commodities and stuff. What's your take about gold and silver, especially right now? There's 2.3 trillion just got pumped in, if not more. They're printing money. What are your thoughts about gold and silver?
Yeah, so I will caveat with I'm no longer a licensed financial professional, so I used to be. So this
I'm
is not
holding
financial.
you to it.
This is
No.
No, it's interesting because it is, in times of recession, gold does good, and we're seeing that, right?
It's at 1,700 right now, 1,720.
And so you're like, could it continue to climb? Sure, it's possible. I mean, it's one of those things where you're hedging against, when equities go down, you're using gold to kind of basically hedge against that the risk, right? And so, is it possible that those will continue to rise? Yes. For how long? I have no idea. And so I would call it speculative, right? And so it's one of those things that I think a lot of times, you own a little bit, let's say no more than 5% to, of your portfolio. But I personally don't own any gold right now that I know of. If there's an index fund I'm a part of, I'm disclosing that. But yeah, the reality is could it go up? Sure. I'm not putting any money towards it right now.
Yeah. With me, real estate's one of many ways to actually, more like a few ways. But real estate, I could park my money there. I literally buy a house, I park my money there, it appreciates, and so many other great things about real estate. But same thing with gold. Like, I literally just park my money there, and whatever price I buy it at, that's literally what I lock in right there. And so I think you're at your 5%, maybe 10% of your entire portfolio. It's just wise to be a little more spread out than just say, like, I'm all in right here. We got to be wise. And so Deacon, what would you say you already mentioned one book. Is there another book that you would say we should read this book, either for passive income or anything like that?
My book? No, just kidding.
Do you have a book?
I do have a book.
Okay, what is it? I don't even know you had a book. What's
How to Retire Early. Or no, it's called You Can Retire. I don't even know the name of my own book. It's called You Can Retire Early by Adams Media Group as a publisher. But I mean, so really I talk about, for a lot of people, it's not about retirement. It's actually about financial independence, right? I think that's what a lot of people is they want to take control of their life, say, I have the money to do whatever I want, whenever I want, right? So it's less about like early retirement and more about setting yourself up. And so I talk about entrepreneurship as a way, right? And that's what we're talking about right now. I talk about real estate, which obviously your podcast is, and this is about. And then I talk about investing in the stock market. Those are the three ways to essentially create those passive income streams so that you can have that financial independence. So my book is more of like a starter book, right? So it's definitely not the 2.0, the money mustache, Mr. Money Mustache type stuff where they're really into the details. Much more just how do you get started on that journey to setting setting yourself up for success. But I really didn't want to shamelessly plug my book, but I'm glad I got a chance to. I would say like Total Money Makeover by Dave Ramsey was a huge book for me, especially if you're watching and you want to pay off debt. That was a huge book, and really giving a game plan for how do you pay off debt quickly. Robert Kiyosaki's book, Rich Dad, Poor Dad. I didn't really like as much of the leverage part. What I did like was he had all these stories about passive income, like, and I don't know if this is true, but like as a kid, he would get comic books for free, and then he would stock them in like his dad's store.
Tear off the cover because that's what they had to sell. Or the guy that would get it, the distributor, he just needs the cover.
Yeah.
So he'd take the comic book.
Yeah, and then he would hire his friends to like man the comic book store, and he's like 10 years old making money, and I'm like, it just gave you outside of the box ideas of like, how do you create a system to where income flows through it and you don't have to be a part of it. So I found that really
I love that.
interesting as well.
Absolutely. I wholeheartedly agree. Passive income, well, actually Rich Dad, Poor Dad got me started down the route of passive income, and now every single business I create, I have the number one component is passive income. And so for everybody watching this, this is the Master Passive Income Show. I'm actually going to interview Deacon as well on the Successful Unemployed Show, because he is a great businessman, and he's got many great website businesses that we're going to talk about. And so I'm going to put a link to that as well in the description for you to check out. Everything's going to talk about creating more passive income, creating businesses on top of having real estate, which I love having my online businesses. I love having my real estate. I just love serving more people, and online businesses are great ways to serve more people. Real estate's a great way to serve more people. So Deacon, is there any advice that you would give anybody listening right now saying, I want to get started in real estate, I want to get started in passive income, I also would just want to get started out of debt, like everything that you've gone through, what's one bit of advice that you can give us?
Yeah, the best thing is just put it down on paper. So I realized that like when we want to pay off 52 grand in debt, we had to put it down on paper and say, hey, what are our income, what are our expenses, right? When I wanted to grow my business, I had to put it down on paper, say, hey, what is my income now? What do I want it to be? So really, whatever your goal is, figuring out a way to capture it on paper or Google, Excel, spreadsheet, whatever, and basically say, hey, this is where I am, this is where I want to be, and then map out a plan to get there, right? It's as simple as that. Like, I think people oftentimes, we have these dreams, right? Like, I want to get out of debt, I want to retire early, but you need to know what it looks like, and then you need to be able to know where you're at, and then you need to map out a plan to get there, and you will.
I know when I first got started thinking of the direction I want to go, I literally had a goal, my 10-year goal. So I read Rich Dad, Poor Dad, and I saw Robert Kiyosaki said in 10 years he was able to quit his job. I said, you know what? I'm going to make that goal. And so I mapped everything out. I said, this is what I need to do. I started so many businesses. I had a convenience store. I had a skateboard manufacturing business. I had a graphic website design company. I started lots and lots of things, but real estate was the easiest one, and I made the most money, and I did the least amount of work from real estate. Now, give us a thought of, if you're going to go back and give yourself any advice as a young deacon growing up, what would that advice be?
Ooh, that's a tough one. I think it's allow yourself to fail, because I think that my failures were the biggest catalyst for change, right? And if I would have just failed and then I would have just wallowed and say I'm never going to try again, like I wouldn't be where I am today. But I took those failures as learning experiences, like, oh, hey, I didn't do well in this deal. What can I do differently so that in the future I'm more successful? And then every year I'm doing better and doing better and doing better. So yeah, look at failure as basically just a metric for, hey, I didn't do that right. What can I change to do better? Because I think when you're young, that's when you can be impressionable and be like, hey, I'm just going to give up and I'm going to work a 9-to-5 job and I'm going to, and give up on the dreams. Like, no, don't let it knock you down. Let it be an inspiration to keep moving forward and do it better.
I found that every single time I failed, that was what the most impactful lessons that I learned is when I fail. And when I win, of course, I learn a little bit of lessons, but it doesn't sting in my brain. Like when I literally lose on something, I figure out what I did wrong and I rip that out of my business. Like if I bought a house that cost me like an extra $3,000 or $4,000 after the fact to pay into it that I didn't know, that grailed in my brain, okay, watch for this and watch for that. So I love that, being able and being willing to fail and doing things to fail. Okay, so what is because people are going to want to reach out to you, especially learning how to get out of debt, be more financially savvy. We talked about Well-Kept Wallet. Talk to us about how can somebody find you? How can they, do you have a YouTube channel? Like, tell us how people can get hold of you.
So YouTube's big for us now too. Well, big, we've got 1,800 subscribers now, so I'd love to have you as one. But yeah, so YouTube, and it's just youtube.com/wellkeptwallet. Yeah, that's it. And then wellkeptwallet.com is our website where we have most of our content.
How long have you had Well-Kept Wallet?
Since 2010, so about 10 years.
Wow, look at that.
I feel like a dinosaur now.
Well, a lot of people now are just starting blogs. You started it way back in 2010, back when people weren't necessarily making a lot of money, but we'll get into it. So everybody that you're watching this now, also click the link to go and listen to the Successfully Unemployed show. You're gonna see him talk all about his business, which kills everything he's done in real estate. So, all right guys, so again, Dustin Heiner here with Master Passive Income, and I'm super excited to have you here with us. So I'll see you in the next video, and thanks a lot, Deacon, for being here. I appreciate it, man.
Thanks for having me.